Welcome to the Online Business Launchpad podcast. I'm your host, Trudy Rankin. And today we've got Kyle Kuderewski with us. He's the operations manager for something called WebStreet.co. Now, WebStreet.co used to be Empire Flippers Capital. And for those of you who have been listening to the show, you may have heard me mention my interest in actually buying online businesses. I've got a case study that's currently underway, and I'll talk about that in another episode. But Empire Flippers, as it stands, is a platform where you can buy and sell online businesses, and Empire Flippers Capital was all about investing in that. And that's now become WebStreet Co. One of the reasons why I thought it would be really great to speak with Carl today is that he's been on what I would call a non-traditional journey into the world of small business, still on the corporate side, but he's also delved deeply into the world of entrepreneurship. And he's got a lot of information to share about just a slightly different way of doing small businesses, investing in small businesses, and potentially it's a bit of a two-sided coin that I'll let him talk about later, because there's opportunities to invest, but there's also opportunities to help the investors build their portfolios, if that makes any sense. So without me confusing people too much, let's just get straight into it. I'll get Kyle to talk all about this world that we're looking into. And I hope you're interested. I'm fascinated by it, and I think it's really interesting. So welcome to the podcast, Kyle.
Hey, Trudy. Thanks for having me. It's a good intro. We got a lot to get into.
There's a lot we could get into. We could take this conversation a whole bunch of different ways. But before we do that, let's just get, I guess, a little bit of understanding for our listeners. Who you are, where you're from, how did you get into the place where you're the operation manager for WebStreet?
My name's Kyle Kuderewski. I'm on the East Coast of the United States, near Savannah, Georgia. The very short version is I went to engineering school, graduated, got into a corporate engineering role for about a decade, enjoyed it, but knew it wasn't something I wanted to do forever. I like to say I'm an engineer turned investor. We're on the coast here, like I said, so beach towns, and I got into the vacation rental industry business. I was looking for a side hustle. I saved money for many years, looking for a side hustle. And that's when I discovered Empire Flippers in the online business world. And so I was really interested in purchasing one of those businesses and running one on the side. And I ended up going a different route, going vacation rentals. I still do some of that today, but I kept an eye on the online business industry for many years there. And I really liked what Empire Flippers had built. And once they brought the investing arm on, allowing people to invest passively in online businesses, I looked at investing there. And then the more I looked at it, they were starting to grow the team. And I just decided to throw my hat in the ring. I've been with them for several years now and enjoying, pretty much every minute of it.
It's a slightly different approach, I think, to what a lot of the listeners would be having in terms of an experience. Most of our listeners are corporate people who are going, how do I get out of corporate? And you've gone, oh, that's interesting, being out of corporate, but actually here's the corporation that's doing what I'm fascinated by. It is a slightly different look. So talk to us just a little bit about the journey from Empire Flippers Capital to WebStreet, and then what WebStreet does.
Okay. So just a real quick background on Empire Flippers. Like you mentioned, that's a brokerage or marketplace where you can buy or sell online businesses. And for years and years, we heard from our customers, can we just give you money and you run the businesses, or can we invest in those businesses and you run them for us, whatever the case? And we just kept saying no. After you heard it enough, we decided to come up with a way for people to invest passively. So we started Empire Flippers Capital, which is now WebStreet. That was always a plan to separate two separate companies, but we had a bunch of shared resources at the beginning and we were under the same umbrella. So started with Empire Flippers Capital, and essentially we are a way for people to invest in online businesses completely passively. If you see some of these other platforms like Masterworks for art, VinoVest for wine, or a bunch of real estate platforms, we are essentially doing the same model for online businesses. And then the other side of that coin, which we'll definitely get into, is there's the investor side, but there's also the portfolio manager or operator side. So people that have a track record of building and growing these online businesses that want traditional financing. Is hard for online businesses because there's not physical property. The SBA loans are not, financing is not so much available. We offer a way to help people grow their portfolios and their experience if they have a good track record in the online business industry.
And that was one of the things that I was interested in, because as I was saying to you earlier, I have been listening to a podcast where somebody was talking about WebStreet and that whole concept of the enterprise or an experienced portfolio manager basically being able to come in and run these portfolios of online businesses. And I just thought that was a really interesting career path for somebody who might have gone down the small business route. successfully developed a few very good websites and then decide maybe they don't want to run them anymore. Maybe they want to try something new, and having the ability to go in and develop these websites on behalf of the investor investing in the websites.
I think that's probably worth digging into just a little bit, because it's similarly what attracted me to Empire Flippers and WebStreet, a belief in the online business industry. Everybody knows real estate can be strong in different types of traditional businesses, but these business models, Amazon FBA, content, et cetera, we still think it's really early in the game for those businesses. They've been around a while as far as compared to real estate or other asset classes. They really haven't. And everybody's incentivized by different things, right? If you're incentivized to want to be location independent or be able to travel or work your own hours, those are some of the things, along with the upside of the businesses, that were attractive to me and got me into the industry.
There's a lot of big benefits around that whole ability to work remotely. And it's nice having just another way of looking at it to be able to do that. I'm a little bit curious, because the whole portfolio management side of things for WebStreet, how new of a thing is that for you? How long has that side of it been available?
From the start of EF Capital, we called them operators at the beginning. We really wanted to leverage Empire Flippers network, where there's over $500 million in assets sold through EF. They've just been around the block for quite a while. So we knew we had a big network of experienced portfolio managers. And some of them may have been selling $200,000, $300,000 businesses, but maybe they wanted to grow $1 million business, $1 million plus. So we thought we could attract those operators or portfolio managers and say, hey, come in, we can get into the terms, but put in this portion of your money. We'll raise this much money for you on top of that. And then you can go out and really grow your track record. So that was part of the model from the beginning. And we probably have over 15 portfolio managers now. We do each of our investments in rounds with different funds and different portfolio managers, and we always have a mix, and we can get into that too. But that was part of the model from the beginning.
I know our listeners are going to have questions around that. If somebody was interested in exploring that whole portfolio management side of things, what kind of skills, obviously we're clear about the experience, you need experience in building websites, but what kind of skill sets would you be looking for to bring somebody in to do the management?
It varies. We've had, if you're familiar with content or affiliate type websites, blogs where you're sending affiliate traffic or display ads, we've had a ton of content and affiliate type portfolio managers experience in that. We've had several portfolio managers fulfilled by Amazon FBA. We've had some with Amazon KDP, which is Kindle Direct Publishing. And then in our next round of investments, we're bringing in a SaaS operator, so software as a service, one of those recurring revenue. And we're really excited about that. And we know our investors are too. So really, any type of online business models you have experience with, we would be interested in if you have a good track record. And even if you're just interested in getting into it, you can fill out our operator interest form. And if it's not a fit right now, we can send you some direction on how to make it a fit down the road. So I'll get you this for the show notes. We have an operator landing page, and it's called an operator interest form. That's really the beginning of our application, just top of funnel. And then from there, we have a thorough vetting process where we can make sure we're bringing in the best portfolio managers so that our investors are trusting us to find those top-notch portfolio managers. And to put a bow on that, each different monetization requires different skill sets and different teams. And so some of the content, they have teams of people that are cranking out high quality content or display ads, whatever the case. Some of the FBA people have teams and warehouses in place, shipping arrangements in place, and things like that. So it can really vary based on the monetization, and there's some overlap as well. It's a wide ranging answer, but hopefully that's helpful.
That's really helpful. And definitely we'll put a link in the show notes so that if people are interested, they can go and check it out. I do have one quick follow-up question. Just a clarification question for my purposes. So the person who's interested in becoming a portfolio manager have to bring their own idea or their own website with them, and then you form that round of investment, other people who invest around them? Or do you have the idea and they just come along like an employee with extra benefits or something? Yeah,
they don't bring their own sites to the table. That doesn't mean they can't have their own, but the way that it works generally, just to make it easy, there's usually, when we open an investment round, it's open for about 2 to 3 months. So we've got a couple of portfolio managers in that round. Investors come in, we raise $3, $4, $5 million, whatever the goal is, whatever they have specific targets. Once we close the round, they have 90 days or 3 months to go out to Empire Flippers or other marketplaces and purchase businesses according to their strategy. So they go purchase the businesses, they bring them to us, and they do their due diligence, and they say, okay, we think we can grow this based on this XYZ. And we say most of the time, yes, but there are times where we have ultimate veto power, again, because investor returns are the most important thing for our model. So they come with a track record. We raise the money. They go find a business or businesses. They purchase them with the money that's raised, and then they start to grow those businesses. As they grow them, investors receive returns. We receive our percentage, and the operators obviously receive their percentage as well. I think we have 14 or 15 portfolio managers so far, with between 35 and 40 businesses acquired. So most of them are acquiring 2 to 3 businesses.
Do you have a model whereby you take some of the returns, the profits, and use them to reinvest into that portfolio?
Yes, each one is explicitly laid out. There's times where it's FBA and their strategy, which again is fulfilled by Amazon, and just introduce new products. Part of the money that we raise may be set aside for product development or what we call working capital. Same thing. Any of the profits go out 2/3 to investors, 1/3 to the portfolio managers in WebStreet. But they do have discretion on if they need to reinvest in their inventory for Christmas. Obviously, that's something that's in the investor's best interest. So we keep an eye on that. We have bookkeeping services and all that to make sure everything's on the up and up. But yes, we definitely allow them to use the capital in the ways they best see fit to run the businesses.
Mm-hmm. In terms of the length of time that this portfolio lasts, is it meant to be like a buy and hold forever? Is it a buy and build and sell, flip it and make a profit that way? Is that set in stone?
I know that's very insightful. The range is set to be 2 to 4 years. It's not a hard and fast rule. We do require at least 1 year. Otherwise, you get short-term capital gains, and it's just not good for anybody. But the range is set to be 2 to 4 years. And we're actually, this is mid-September when we're recording, we're set to list our first sites next week on some marketplaces. So that'll be the first ones that we have going full cycle. They bought them. They were about a year and a half ago, grew them to the point that they've got good returns all along the way. Every quarter is when we distribute the cash. So they're cash flowing assets the investors get each quarter. And we're at a point where they're ready to make an exit. So we're excited to see that happen.
I think that's really interesting. It'd be interesting to see how that sale process goes.
For sure. And on the flip side, we have some that have been held over 2 years already that we're just not ready to sell, that could go another year or two.
Do you have a sense of, in terms of just high level principles, when you think something's ready to be sold, or when you can sense that it still has growth potential?
Part of that is reliant on the portfolio managers, again, because they have so much experience with those types of businesses. But also within our team, we have tons and tons of Justin and Joe who founded Empire Flippers. There's a bit of an intuition there. We have a lot of insight into what multiples are at for content sites and what multiples are at for FBA. And if you've doubled a site in a year and a half, maybe you could continue to grow it. But a lot of times it's up to the portfolio managers, and they say, look, I've applied all the strategies that I know to this business and it's at a really good place. Let's sell it. Or, hey, I'm not done. I've just getting started. I can still do X, Y, and Z, and we can keep growing it. And we may agree, we disagree, but there's a lot of expertise there that goes into them, and each situation is unique.
You have a particular set of criteria that you use for selecting websites or online businesses?
It varies. The biggest thing from the get-go is it has to match the criteria that we lay out to investors. So if portfolio manager A comes in and says he's going to raise $1 million and buy 2 to 3 sites in the $200,000 to $300,000 range, we're not going to let them come in and buy 1 site for $1 million. There might be a little leeway there, but it needs to match the criteria and the track record that he has. So that's, again, why we have ultimate veto power. Now, in general, there's other things we look at, such as, are profits increasing? Are they declining? Is there seasonality? Is there one SKU or many SKUs? And all of those can be good or bad things, but they need to be things that you're aware of. So there's not hard and fast rules on it. Generally, declining businesses we're going to shy away from unless we know that we can get them at a really good deal and there's a clear strategy on how they can be improved. The other thing I would say, which is more rare because it limits our ability on how many businesses are out there, but at times there's portfolio managers who have expertise in a particular niche, say a pet niche, and they say that I want to go buy 2 businesses in the pet niche. We're not going to let them go buy a home goods type thing. But that's more rare, but it does happen.
Yeah, that's interesting. Do you have any topics in terms of the types of websites that are no-go zones, the things that you won't buy?
Empire Flippers has always had a philosophy, just like sin type websites. Some of this has changed now with no websites that would be involved with, say, gambling, drugs, porn, or any of that type of thing. So we would follow those same philosophies as far as the niches of the sites. But like I said before, declining sites are a big thing, a big kind of red flag. Seasonality can be a good thing or bad. It really just depends on the operator strategies. And then a lot of them have different philosophies around the amount of SKUs on FBA. Some see that as a good way to diversify and have a bunch of different SKUs in their store. Others see that as too many choices for customers. So there's not a hard and fast one on that, but it's definitely something we want to be aware of.
At the end of the day, it comes back down to your portfolio manager and their area of expertise and working in it with a particular way of thinking about a website and website growth.
For sure.
Just out of curiosity and thinking about trends, so thinking about industry trends now. So you've got FBA type sites, the e-commerce stuff, you've got content sites, you've got SaaS sites, there's all different kinds of business types. What would be the general trends that you're seeing in relation to those types in terms of demand?
Good question. FBA has certainly been either on the decline or flattening out since COVID. You'll remember, or some of your listeners may remember, the big aggregator booms. We saw really crazy multiples at Empire Flippers and across the industry as a whole. It was just a bit of a bubble. I think they're coming back down to where they're supposed to be. I don't think they're really declining anymore, but they're definitely flattened out, and they're not where they were in 2020 at COVID's height. So that's one very common trend, and most people know about. Content is just steady Eddie. Content's kind of been steady Eddie for a while, increasing and then staying steady. People are a little bit nervous around AI and ChatGPT and all of this stuff, of course, and rightfully Google updates can always mess you up, but so far not a ton of disruption there. These content operators or portfolio managers, the good ones have been through a lot of changes, so they need to be adaptable, and that's something that we would look for. SaaS is a bit of a wild card. The recurring revenues are a lot easier to forecast because we've all had subscriptions that we forget to cancel or that we just like and continue to use and we don't even bat an eye at. So it's a lot easier to model those out. But you have SaaS businesses. We're on a Zoom call right now. That's a model of an enormous SaaS business, right? We wouldn't be into something like that, but all the way down to a dollar a month video game on your phone or something like that. So there's a huge range of SaaS businesses, but generally speaking, the model is easier to predict. KDP has some of the same qualities that I said with content. It's pretty steady. The competition's a little lower there. That's the other thing with FBA. The competition got so high that there were so many more players in the game that now you really have to know what you're doing. But that has made some of the acquisition better. So there's gives and takes with us as investors. It's a bit of a long-winded answer, but if you were investing 2 or 3 years ago with us, we were buying businesses at a higher multiple. Even though FBA has declined a little bit now, maybe you're getting better deals on the acquisitions. There's always give and takes.
And it's interesting, pardon me, because for the listeners, there are so many different business models that you can build a business around that it's just fascinating to me. I've been watching a few of the different models. I find the SaaS model interesting, but I never want to run one. I've got a background as a chief information officer, and I know how complicated that can be and how fraught. But then every model has its ups and downs or pros and cons.
And there can be overlaps too. There can be overlaps, certainly between content and display ads is a very common one. But with KDP, maybe you have content that's sending stuff to your Amazon store, stuff like that. There are overlaps.
Out of curiosity, you're talking about a big range of SaaS type things. Have you ever seen or purchased or sold a one app SaaS company? I'll call it an app. Like you mentioned a game on your phone or something. It would be an app, basically.
I know Empire Flippers has. I don't know of any good examples off the top of my head, but I know they've sold singular apps. I know they've sold packages of apps, and then other SaaS businesses. Empire Flippers in particular was a really hot spot for FBA, and then has been starting to get more into SaaS recently. And now that we separated as WebStreet, I don't have the visibility that I used to.
I just find it interesting because there's so many different, I wouldn't want to run a SaaS company. It would actually be fun to play around with some of the concepts.
Oh, definitely. And I wish I could give a better answer. One of the reasons that we separated as WebStreet was because at the beginning, we only purchased businesses through Empire Flippers. We knew the vetting process over there. We knew they're not guaranteed to be great businesses. They're about as close as we could get. We knew they were vetted. We knew they were supposed to be high quality businesses. But we also know that with the amount of investor demand we have, we need to be able to purchase businesses from other places. There's just the marketplace. No single marketplace is big enough. So now we've slowly been opening up to more and more brokerages and private deal flow. And we've been buying from several now. So part of that was removing the conflict of interest of us. Are these businesses being listed on Empire Flippers or whatever? So we don't have any visibility into that at all anymore.
The whole conflict of interest is always an interesting dilemma. It would have been an important thing for the founders to basically just be able to put to bed in terms of a potential issue.
Exactly. If you listed a website on EF, you want the best price for the site that you built. And then I want the best price for my investors. So there's a bit of an obvious conflict there. And so that's no longer the case.
That's good. Just before we wrap up, I want to touch on the other side of the coin here, which is the investor side.
Mhm.
Typically, is there a typical investor? Is there a profile of people that are more likely to invest in these types of things in terms of online businesses?
There's two parts to that, I would say. Excuse me. Initially, we were open to accredited investors. It just made sense for us from the beginning. Now we started trying through crowdfunding as well, where you don't have to be accredited and you have a lower minimum. Of course, the terms are a little less. So just from a monetary minimum standpoint, we started out at $10,000 minimum per fund that you invested in. And that's since gone up to about 25,000 per fund, or each round varies. So our upcoming round 6 would be a $60,000 investment, would get you exposure to 4 different portfolio managers. So you're looking at about 15,000 in each or something like that. Now that's from the money standpoint. From the persona standpoint, we've seen it by far the largest portion of our investors are people that have been involved in online business space. Maybe they've bought and sold, maybe they have FBA sites, but they want exposure to content, or maybe they're just entrepreneur outside of the online business world. But entrepreneurs, online business people, savvy investors who have their normal 401ks and all that stuff, but that kind of bores them and they want to be into other alternative investments. One of the things that's pretty cool is when you invest in these portfolio managers, you get quarterly reports that come along with your quarterly distributions, which are just cash distributions to you, but which sites that those people go out and buy, those portfolio managers go out and buy. So every time there's an acquisition, you get an update. Hey, here's your URL. Here's a video explaining what they're going to do to grow the site. And so there's a little bit of dinner party conversation there too. We don't share those publicly, competitive reasons for sure, but it's cool for people to get the quarterly updates. What went well on their growth? What went wrong on the sites? They're getting ready to sell the sites, those type of things. Does that kind of help answer on the persona side?
Definitely it does. And one last question with that, in terms of the amounts of money being invested, what's the minimum and is there an upper limit?
The minimum, it varies per round. So we always group portfolio managers in round 3 to 4, and it's important for diversification purposes. So you wouldn't want 4 FBA operators in one round and then FBA goes downhill or whatever the case. So we always group them for diversification purposes. And generally speaking, if it's 4 funds or 4 portfolio managers in a round, that would be in the $50,000 to $60,000 range, get you exposure to all of those. Now, again, we started testing through crowdfunding through WeFunder, and the minimum was a $1,000 investment. Your terms are not as favorable as the accredited investor terms for obvious reasons. If we have to use WeFunder, they're going to get a percentage and things like that. But that gets you early exposure to the asset class. Maybe you want to test the waters and learn about it and then see if you want to do more. That's what the minimums have been. And we continue to adjust. There's different incentives at different levels. We don't have a max. I don't think we would let somebody take down a whole fund on their own. I think the largest investment we've had from a single investor in one fund is 500 or 550,000. So we've done, like I said, about 14 funds, over 30 million invested, and about 35 to 40 assets purchased. So starting to get quite a track record. It's been 2.5, coming up on 3 years now. We were building that track record. What do the investor returns look like, et cetera? And that's really starting to get built up now.
I think it's really interesting. And for the listeners who are thinking, I'm interested in this sort of thing, I've got $1,000 tucked under my mattress somewhere, and it's cheaper to spend, or it would be better to invest that into one of these businesses with a company who has a track record in investing, rather than spending $1,000 on a course to learn how to build a website and try to build everything from scratch. It might be a pathway for many people who would prefer to just never get into that whole learning process, which can take quite a long time to actually get really good at building website businesses or online businesses. If somebody was in that situation, and like I said, we're going to put the link in the show notes for basically having a look at what's there in terms of WebStreet. You mentioned do you have training available for people? I'm getting myself mixed up here. First of all, we've got your portfolio manager. You've got information for them about how they can potentially grow into that role. And in terms of the investors, is there any kind of training for them or potential investors?
Again, we'll put it in the notes, but webstreet.co is our homepage, and you would just need to create an account. And top it says, I think, get started. Very simple. Name, email, really nothing much more than that. And then the answer to your question is twofold. So there's a resources section on our site, which has a bunch of information on the different business models, case studies on operators, what they've done that's worked, what they haven't, et cetera. But then we also have investment advisors, which they just do an onboarding call with you. It's not really a salesy type call. It's onboarding. Are you accredited? Are you not? How much are you interested in doing? What questions do you have? Is this a fit or not? Do you want us to come back to you down the road, or do you want to take the step forward now? And so we have investment advisors, 3 or 4 of them on hand that are there just for that purpose, education and seeing if it's a fit for you or not.
And so if somebody was interested in going down the WeFunder path at whenever the next round is, if they go and set up an account there, then they'll find out about those rounds?
Exactly. We'll send you down the right path according to what you're looking for. But yes.
Yeah. Fantastic. Kyle, that's been really interesting to me. I'm going to keep an eye on things, and at some stage, maybe we'll have a follow-up chat. But once again, if you just want to share the website URL with people once again, it's been great talking with you.
Awesome. Great talking with you as well. WebStreet.co. And then, of course, my email is kyle@WebStreet.co. You can find me on LinkedIn. WebStreet's on Twitter. We're pretty easy to get a hold of, and just look forward to connecting with your audience.
Fantastic. Thanks again. Thanks, Kyle.
Thanks. Cheers.